Hey, good morning. This is John from Uplift Trade. Today is September the 2nd. It's close to 10 a.m. in Europe. I'm doing fantastic. I trust you as well. If that's not the case, hang in there. This will pass. Now, Bitcoin's price action is triggering psychological thoughts that the bottom is in. Perhaps it is, maybe it is not. Since the low made on September 1st, we have a low, we have a high, a higher low, and a higher high. So that's what you would like to see together with volume and some momentum whenever price is reversing. So now it's too early to call it a bottom. If I look at the 10 minutes, price is looking at maybe revisiting Monday's high range. Yeah. For me, on the 5 minutes, if we are in an uptrend towards making higher highs for the foreseeable futures, days and weeks, then these consolidation we have, usually the low gets taken as a fake out and then gets reclaimed. It seems that this is what's happening now. If you look at this low here at 110,045 and some change, it was taken, the stops were eaten, and now price has reclaimed space in between the moving averages. I'll go with a contrarian approach on that. I'll go short on this particular setup. I'll place a stop above here. It's quite far, but I'd like to see price creep back up towards 110,600 and some change. We have those two highs here. Technically, some will call it a double top on the 5 minutes because we have taken the low. So if you want to call it a double top, then the target for this move to the downside could be somewhere around, what do we have? 109,477. That correspond to this level here on the 10 minutes, which is a possibility. Yeah, but that would be my play. I may actually enter short earlier, so I will take a short now. I'll keep the stop over here. What's the loss on this one? 92 bucks. That's doable. My entry is a bit far, but I'm not of the opinion that we may revert back up just yet. So let's keep watching the price action. The short is in at 110,263 on this Binance chart, and perhaps there is a potential target towards 109,470 and some change. Yeah. If I take the take profit, that would represent roughly 200 bucks, 197 on this particular trade. So I'd like to see how price action shapes over the next few candles. Whether I'll be adding to the position towards a full contract is a question mark. Right now, it's just a quarter of a contract. Okay, so let's keep an eye on it, pause the recording and resume when there is price action. Okay, so let's update the recording. Some 10 minutes later, price had made an attempt at closing above the moving averages as a follow-up of this long bullish engulfing candle. This bullish engulfing candle did not come with a ton of volume. If you look here, very little volume to the upside towards the moving averages, and the one below, the one after that is a complete failure. So the short seemed to be a good play. I wish I had entered another quarter of a contract on the break of this candle here, but I was not ready to do so. So 1 minute, 4 seconds left to the close of this candle. Let's see how it closes, and I may add another quarter of a contract on the fly and decrease my stop to this high here, or perhaps this one. We'll see. Depending. If this candle breaks this low, I add a quarter of a contract and I move the stop here. If this candle stays above this level, I will not add a contract, because this might be a retest of this low here, and then price move to the upside. So for now, no action, but the short appears to be the right move for the next few candles. So let's keep an eye on the price action. All right, so the candle closed just on the level that I was looking for. And now there is an attempt at getting back up as well. I think I will add another quarter of a contract right here, and I will take down my stop to this candle here. So initially, I entered the position with a quarter of a contract and the stop was at 92 bucks, if I remember correctly. Now I added another quarter of a contract, so it's half of a position. I lowered the stop to $108 for a loss, which is manageable. So let's see if there is price action to the downside, perhaps towards this target area, 109,470 and some change. Now price action is doing what I said earlier may be happening, meaning that these two bearish candles on the 5 minute could be a retest of this low. Let's see, now that price is in between the moving averages on the 12 and the 21, let's see if these two moving averages keep price capped to the downside. Like we had one attempt failed, second attempt failed. Is this one going to be the same? I think if this high gets taken, then it's going to be likely that not only will I get stopped out, but this was effectively a retest of the low. And then now we are perhaps going to look for long position. So resuming the recording, because the last 5-minute candle made an attempt at closing above the moving averages, but ended up closing in between the moving averages. Pretty much the same pattern of price action we have for the last 1, 2, 3, 4, 5, 6, 7, 8 candles. So within less than an hour, 5-minute price chart has indicated that the moving averages, the 12 and the 21, is keeping the price action under control. It's a good sign for the short, but now it seems that price is doing some sort of a contracting triangle, if you want to call it like that. These tend to compress the price to the upside and to the downside towards the mid of the range until it breaks. It's a 50-50 game. Breaks to the upside or breaks to the downside. Yeah, so let's keep watching what price action is doing. Less than 10 minutes later, we have a good example of the anatomy of a fake out. What I mean by that, if you look on the 5 minutes, I acknowledged earlier that price was compressed in between two trend lines, one ascending here and one descending. There are two types of trend lines, and one is for me more reliable than the other. The least reliable is the ascending or the descending trend lines, simply because I use them for visual recognition, visual interpretation. I don't use them as signal or trigger point. They get violated left and right more often than not. The horizontal trend line, on the other hand, I use it for visual recognition as well as potential trigger point. That's the key difference. Here we have a good example. Given that this descending trend line is touching two highs, you would probably see this candle here closing just a tad above, assuming that I correctly identified the highs. You would assume that this candle made the breakout. Very often it's a fake out, especially on those contracting things. Like I said, it's a 50-50 games. And one thing that is not ideal in my setup, because I entered before the pattern was recognizable, is that my entry is right at the middle of this contracting triangle. So that's not ideal. Anyway, we have a fake out in place here. Yeah. So right now the question is, are we going to have a fake out also with this ascending trend line? Yeah, so we'll keep an eye on the price action, but I think it was worth highlighting that ascending and descending trend line for visual recognition, yeah, sure. But for trigger point, no, I don't use them. I might be wrong, huh? Price might just shoot up from here and I will get stopped out. That's fine. The risk is 110 bucks. The risk is accepted. So if I'm wrong, I'm wrong. That's fine. I'll move on to the next trade. But I will not close my short position simply because this candle here closed a little bit above this descending trend line. All right, so price has decided to go to the upside and I was just stopped out. So the loss for this particular trade is $110. So I'm going to add this to the book right away. And now that price is making a new move, I'll be looking at how price reacts on this area, this level, you know, because we had a high, a low, a high, failed attempt at breaking through, failed attempt at breaking the low. So perhaps now we're going to be, it's not perhaps, it's more likely that price is range bound until proven otherwise. So let's see what price action is doing. Like I was saying at the beginning of the video, if this low right here, which is on the 4-hour right here, was a retest of the previous low, and that higher high, higher low pattern is the beginning of a reversal, then these consolidation after a move up where price follows the moving averages, these consolidation tend to fake out the previous low of the consolidation, which is exactly what appears to have happened. Yeah. So let's keep watching what price action is doing. So resuming the recording, price is breaking through the high of the range. And if you look at the tape, we have some nice stop orders that were taken, some aggressive buying at 11 contract, 33 contract, almost 34 contract. We haven't had that in a long time. The last time we had such large contract was when price broke to the downside, the former low right here. Yeah, so this was aggressive selling, stop orders from long positions that were taken. Do we have stop orders from short position taken here and that price will resume the downtrend? Perhaps. We will see the next few candles how price evolves. So we had a breakout candle that closed back in between the range, so that's good enough for me to attempt taking a short. I'm going to take a short position and the stop will be just above the high of this bearish breakout candle. So the play here is that price will revisit the inside of the range, the mid, and perhaps the other extremity, the low of the range. That's the play I go for. And the risk on this position is $58. The entry point is 110 for 82 precisely. So let's keep watching. This recent price action very much looks like an attempt at exiting the range, should I say, to the upside. So I'm going to close the position right away, and I'm going to enter long with a stop. And we'll have to check how much was I into for this previous short position. The stop is at $81, and I will check what was my loss on the second short and add it to the book. So the second short that I closed in order to enter long was at a loss of $29. So that's 110 for a stopped out short in minus, $29 in minus for my second trade. Now I am long 110,592 as an entry point and a stop just below the low of this candle at 110,266. That represents a loss of $81. So let's keep monitoring. As I want to capitalize as much as possible on the move I think will occur, I will add another quarter of a contract on the break above this last bullish candle right there at 110,703. So far the stop was lowered to the low of this candle. It represents a loss at the moment of 183,000. So let's keep monitoring. All right, so the quarter of a contract I added on a buy stop above the high of this bullish candle is apparently not going to be triggered, and the stop will get triggered on this long position for a loss of $183. This range is proven to be difficult to crack. We still have 2 hours and 30 minutes on the 4-hour candle, so it's too early to say. But at the moment, it's the third trade that I take this morning, and it does not turn out to be profitable. So I should be at a loss of, this one gets taken 183 plus 110, that's 293 plus 29, that's 320 and some change. All right, so I'm gonna have a break. What time is it? 11:30. I'm gonna have a break, go for lunch, and resume trading perhaps this afternoon. In any case, if this is the last part of the video for today, then thanks a lot for watching and sticking around until the end of the video. Trading is not always easy. The concept is easy. Its application is very difficult. Now the stop was taken, so 183 in the books for today. It's really critical to manage the risk. I realize when I look back at all my trades, especially for the month of August, very often I have my stop way too close from the price action. That's because I want to keep my losses as short as possible. So I have a large number of trades that go wrong, and fortunately enough, trade that go well outpace the losses that I made. In any case, like I was saying, thanks a lot for watching. If this is the last part of the video and I'm not going to trade this afternoon, I will probably see you and talk to you tomorrow. You take care. Bye-bye.